There we go. How's everybody doing this morning? Good morning, Asham. Good morning, Anurag. Morning, Mike. Check my coffee. John, good to see you. Good morning, Mark. Good morning, Andre. How's everybody's week starting out this fine week? Quite the move up today we got. We'll see if the rest of the day comes. Yeah, exactly, Asham. We had one. Alex is in, looks like. Good morning, Alex. He was having some data issues, which we do see sometimes on these high visibility or high volatility or high volume mornings, especially on the paper accounts. So you definitely see that from time to time. Like you say, yeah, massive move. SPX, NDX, everything's just rallying up right now. And just watching some of the new signals. I have a quad up here. Let me know if this is too much for you guys to see, and I can adjust. I got these on 5 minutes. I've been testing between the 5 and the 10 minutes for the new version 2 signals. When I trade this move, it depends on looking for signals, Andre, so I didn't take anything up because I'm just starting these, so I don't have anything in live money on new signals yet. But I am watching here. We got the first red one, so we'll see if we get any confirmations for a second down if this is not going to last. At the same time, watching volume. If volume starts decreasing, then absolutely way above the wrinkle cloud right now. So there's some good potentials for a short. We do have SR2 is above, so typically indicating a down day with the way this morning opened up here on the indexes on both SPX, NDX, and let me find my Dow Jones. Dave's probably off making $1 million and not able to join us. Not that guy. Wrong Dow Jones. That was one from comments that they were making, so I went up and adjusted. We can go back to that later. That's not the Dow one I was looking for, though. Should be this one. And here it is. Let's see what the Dow is looking like. Always more volume. Yep, see it's starting to decline. Just keep an eye on that. At the same time, watching the other ones. I'm trading more the NDX than the SPX. And there's Dave. Good morning, Dave.
I apologize for being late. I was in the PC chat room responding to somebody's question. And
yeah, no problem. I just said you're probably off making $1 million, and we would have to see when we got to you.
Lost track of time.
Yeah, we're just looking at discussing, the big move this morning, and looking at the charts between, what volume's going to do here, and if there's any potentials to trade this move.
Yeah, that's exactly what I was responding to in the chat room there for the private clients. Interesting, because what happened was, and you pointed this out on the new spreadsheet yesterday, that we had the 3 negatives.
Yep.
Yep. So there's something coming. There was a turn of some sort. And also on the market timer spreadsheet last night, the price anomaly was 434. Wow. And that indicated a snapback today. So that's what we got. And it's interesting because that the ratio between in the pattern that we've identified is that when the market goes up, the spread goes negative, and that's exactly what happened this morning. If you still have the advanced decline line and chart with the and the volume,
oh yeah,
up and down volume. If you still got that, let's bring that. Look at the reversal on the advanced decline.
Wow!
It opened down minus 1,000, and it immediately shot up.
I can't say I've ever seen that before.
That is probably the most dramatic reversal I've ever seen in the advanced decline line, and I watch it almost every single day.
Wow.
Usually it goes down, and then it starts slowly kind of creeping back up again. But man, that is like a rocket ship.
That's amazing.
Yeah, I've been watching the advanced decline line since 1992, and that's one of the sharpest reversals I've ever seen.
Yeah, that far to a negative to that far to a positive in 5, 10, 20 minutes.
Unbelievable.
Wow.
And so, of course, the spread got absolutely destroyed because we have that. We know now that there's a higher probability that when the market goes up, the spread will go negative.
Yep, the inverse correlation.
Yep. So those developments probably, Isham says manipulation. I think you're absolutely right, Isham. That is just pure manipulation. They caught everybody on the short side this morning. The market was anticipating a move lower just prior to the open of about 100 points. And as soon as everybody got in on their short positions, or they had short positions left over from yesterday, they got crushed. I heard Jim Cramer this morning say something to the effect that, and I do not care for.
I was going to say you're talking
Cramer. I take everything he says with a huge grain of salt. But this morning he said something that was kind of funny. He goes, President Trump wanted to send a message to the market that, and he goes, this is pure Trump. What do you call it?
I didn't hear him.
Yeah, he said something about this is Trump signaling that everything's going to be okay. And he's tired of the market going down. Oh, really? The president can get tired of the market going down and completely reverse it.
Right, because he called the trade war off.
Interesting.
Everybody's happy again.
Yeah, interesting. So I guess the president can manipulate the market. That's one of the sharpest reversals I've seen in the advanced decline line. It's almost like, let's get all the shorts in there, get them in. We'll have the indication of a down open of another 100 points or so, and then the specialist just came in and said, "All right, have you ever seen the movie Noah?"
Yes.
Yeah, where all the floods come in and just wipes out the entire army.
Yep.
That was the image that was in my mind this morning. Yeah, that's why this is amazing. Now let's go to the spreadsheet for a second because I want to take a look at, and if you could update the trend, the tab down below on the trend.
Oh yeah.
And let's update the spreadsheet with the new numbers for, I don't know, whatever they are right now, and then we'll update that. Oh, you need to set your
oh yeah, we're way up here.
your scale, yeah. But I'm wondering what that's going to look like after this morning's, see if we broke through that 340 level.
Where'd my chart go?
You should be able to just double click on the scale on the left side. There you go. And then you go to your chart options. Oh, yours is different than mine.
Mine's always different than yours, Dave. Oh, we got dings. There's arrows showing up somewhere. First, I want to do this one too. What was my line? 1167. Let me get that right first. Oh, it's only one off.
Oh, you've been updating it.
Yeah, here comes the rain. If it gets too loud in the background, let me know and I'll close the window.
Go to that little the icon that has like the cross in it. I think that might be it. No, the icon on the right.
Anymore.
No, not that one. It's the icon under format chart area with the cross on the right. Yep, right there. Yep, now you want to go to size. So you have to double click on that again, and then that'll pop up, I think, or maybe under properties. Yeah, or let's see, or you can just pass it over to me.
There you go.
I'll take
I hate playing with whatchamacallit in the morning.
Yeah.
Stop share. There you go.
Where's my spreadsheet? Here we go.
Anurag, yeah, that's exactly what he was talking about, the price anomaly column at 434. Exactly right.
All right, so let's update this through this morning. And let's see. Because when I was looking at this, I'm looking at this area right here. This just below the 340 area, which has held support. And we've got a pretty large move lower. And I'm just wondering if we're coming right down to that support or if we've broken through it to the downside.
It's got to be.
It's got to be close.
I bet it's through it right now and it's coming back.
All right, let's check it out. 26,244.24 at the minute. And NDX. It says on 06. I don't have to put the pennies in there. I don't think it's going to make too much of a difference. Yeah, we're only down 0.56 right now. Interesting.
Now you're at 1168, so you can throw another line in.
Yep.
Survey says right on it.
Right on it. So I'm thinking that maybe this is just going to be like, kind of the shakeout before the spread goes higher. Now, there's another way that you can look at this, and that is that, I mean, for the swing traders out there. Whoops, I didn't want to go that far up. For the swing traders out there, I don't think I can draw lines on this. Can I? I don't think so. Here's the area of support. And so in traditional stock charts, you're going to see this as a horizontal line or a vertical line coming down across the top of these peaks. And then you've got your horizontal here. And typically in traditional TA, this is going to break through down to the lower end. The other way to look at it is the more times it comes down to this area, the more chances are that it's going to break through as well in traditional TA. However, because it is a ratio between the Dow and the NDX, I'm wondering if there isn't some sort of reason why this has come down into this 340 area so many times and it's held. I'm not sure the reason for that. If you're doing traditional TA, here's a nice little flag pattern. Just run up there and run up there. Boy, it broke through beautifully. I mean, if you're doing swing trading, I think a lot of the same technical analysis works on these charts as they do on regular charts, even though we're doing a ratio. But that area right there, I'm going to be very, very curious to see if it's going to be rejected again and we go through it to the downside in a big way. In order to go from, this is interesting, to go from a 3.4 to a 3.3 ratio, what size of a move do we need to have? Let's see, that's a full percentage point. So, or more, actually, it's greater than that. Let me see if I can find something here. Okay, so we go from, see, look, I mean, you'd have to go back. Here we go from 4.2 to 4.15, right? So that's 0.05 in the ratio. Look at the decline in the spread. I mean, that's quite a bit. That looks like 2 or 3% there.
And I'm just drawing up another one to go from a 3.5 to a 3.4. It's 2.3% to the negative.
There you go.
If you look down from, what's the date on that? 524, 2019 down to 724. So
There you
May, July of this year.
Okay, so that's that's what's going to need to happen. So if we do break it, it's going to have to go down a lot more to break it. It's not just going to be a single day, a 0.5% move. No,
Right.
it's going to be way more than that. And so that's why I'm thinking that, it's held that support for so long, and it just, traditionally, like I said, it should break down through the horizontal line. The more times it comes down to touch it. We also have, the first time it kind of came down to it, it bounced, and then it bounced, and it bounced, and it bounced, and it bounced. And then we had a pretty decent move higher. Then it came right back down to it, had a decent move. And now the bounces, the last three bounces here, the last couple bounces anyway, haven't really produced much to the upside. So in other words, the bounces are getting weaker. So that could play into it too. If the spreadsheet starts to turn negative here, and we get, looks like we go back up on the bell curves onto the negative side. It looks like already with just the update we just did, the binary trend has turned completely negative on look at that, the entire row has turned negative. So what does that mean for the market? Right?
Right.
It means we're going higher.
The other part that I was noticing too, and I was looking at that last night that we were just talking about with the positives or the triple negatives, is the one reason I wasn't completely convinced on it was we were just at a 1 on the overbought oversold column. Previously, it's either at an extreme when it actually has a big move after it. So seeing if this was only at a 1 because we were very low cumulative bell curve and the cross column bell curve, a 0 and a 1.
Right.
Look at the previous ones where it was negative, 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 where it actually moved. The following 2 days, we were at least, -6 here, so it's a little bit more oversold. Not 6 is obviously not a big number, but whenever those do happen, I am tracking that number. So here's a 5, not a big number, wasn't a huge move, but that was one thing I was like, hey, we're only at a 1 here. I'm like, I have less weight when this is not at a higher number.
Right. And also, you're identifying in the binary trend 2 rows that have that are completely filled in on your. Oh, see now. Oh, you didn't update it today.
I did update today, right?
So look at row 1161 and 1162.
Yeah, so just one short.
Almost, yes, exactly.
Yep.
But we went. Then it changed the trend though.
Yep, then it went 3 negatives. Yeah. And this starting to fill out, 1, 2, sporadic, 4, 5, and now you had a full row. So yeah, that's definitely the negative rebuilding here.
Yeah. Let's see. Oh, Lieutenant Torres. Good morning, sir.
Erickson House.
My guess is that we are at the market top, and NQ has trouble busting through the top and keeps getting rejected at 3.4. Interesting. Very interesting. Yes. Nordic says, Dave, where are you reading the MTPA column on the MT spreadsheet at 434? Do you have the spreadsheet there?
I don't have yesterday's. I can download it quickly if we need to, though.
Okay.
Doesn't take long. Pause that for a second. First station identification.
Yeah, I mentioned it to, it was one of the people in the office that was doing the update. I said, you didn't mention the PA, you didn't mention the price anomaly. And I guess the response was, well, it's already published. We didn't think it was important, but I said, oh, I don't know. I think we're going to get a bounce back, snapback tomorrow based on that price anomaly.
So here's the market timer sheet on the Dow. Make this a little bit smaller. If you guys can't see it, I'll zoom in too. I'll stay up here and I'll just move around. So over to the right column of Newrug is the price anomaly. 434 is what he's referring to right here.
Yeah, that's a big one. That is a big one. And typically what happens is that always happens at the bottom of a market decline.
There was the last one at a big 621.
Yeah. And the next day we're up a couple hundred points.
Yeah, there's the following day, 200 up.
And that, and so, yeah, the 434 was a pretty big number. So, yeah, I mean, the market is really interesting because it doesn't seem like it didn't have the momentum to move up into new highs, but now with this reversal, I mean, the strength of the reversal is amazing actually this morning.
What I think it was 2% on the NASDAQ in the first 20 minutes.
Wow.
I've ever seen it move up that fast.
Yeah. I don't know. Trump has a lot of influence over the market, evidently. Every time he talks about the trade wars, it moves.
What did you see on news? Did you see stuff about Trump, or what did you? I haven't been following the news this morning. Eric says news-driven move.
Yeah, mostly. Have you guys? Anybody in the chat? You guys have any news that besides Trump saying that? Although, boy, they said they weren't going to do anything until September. Now there's like new tariffs coming in. I thought I heard something about new tariffs too. U.S. delays China tariffs. That was the headline. So there was a new threat of tariffs that the president was going to put into effect, but now they're delaying the China tariffs until December 15th.
Gotcha.
So here's this is just insane. It's a total conspiracy, but it's like, well, okay, everybody wants, Trump wants the market to go down, so he says, yeah, we're going to put new tariffs on Chinese goods starting September 1st. And then he's bought up a bunch of stocks. Of course, nobody knows exactly what he's holding because he hasn't and refuses to share his tax returns with everybody. And then he says, oh, no, it's not going to be September 1st. It's going to be December 15th.
Yeah, because we got to make another wave and another roller coaster.
Exactly. Yeah. So is that manipulation? Yeah. Yeah. Yeah, he's basically calling the market with every time he talks about the trade wars. Unbelievable.
1628 on the advanced declining now.
And Nordich says Fed pudding. Yes, it is Fed pudding. Not pudding as in P-U-D-D-I-N-G. It's P-T-I-N-G. For those who are not looking at the chat. Yeah, there was a whole conspiracy around the fact that every time the market dropped, the Fed had a put in there so that they could scoop up stocks real cheap and then take them higher. But you know what? It was common knowledge that the first QE was not only purchasing treasury bonds, but it was also purchasing securities. Since the Fed has never been audited, I'd really like to know what their equity positions are in the market. You gotta wonder. You gotta think.
And only certain people get the eyes on those books.
Yes. You gotta wonder though it was public knowledge that they were buying securities in the QE, first QE at least, and I'm sure they continued through the other QEs. How much of that is still on their books? And are they keeping the market high on purpose because they are trying to cash out? And then when they do cash out of those positions, You know, they're starting to unwind now. They said their treasury positions, but who knows? You know.
Anurag is in love with your new script. He says, Dave, the swing script is pure dynamite. Can't thank you enough. You seriously need to consider restricting this distribution before large circulation starts skewing the results.
Well, I'm glad you brought that up. You know, I was thinking about the same thing. Actually. I said, maybe we should just limit it to maybe 100 people.
Close the doors.
Close the doors.
Sean, what time frame did you eventually commit for the highest probability trades? I saw you're doing a 10 and a 30 with the Signals V2 script.
I would suggest that you have to really choose those time frames based on your own risk tolerance levels. I did the 1 in 5 minute only because, you know, I think a lot of people, you know, don't want to have that risk, so they just want to scalp the market. You can do 10 and 30, which is that's my favorite time frame. I also did a 515, which I really, really like. The 515 actually was really, really good. 1030, yeah, it's pretty good. Actually, there's a couple different ways that you can use that script. One of them is if you're doing any of the theta scalping using the weekly options, the 10 and 30 will work really well. If you're doing day trading using the YMES or the micros, the 515 seems to be really good. The 1.5, I did the video on it only because I know a lot of people are interested in like really just kind of scalping, getting in and out of the market with very low risk. But I wouldn't trade that on a normal basis. I wouldn't do that on a regular basis. I would use the 515. That seems to be the best setup for outright trading long and short positions. The 1030 or the 1545 would be perfect, I think, if you're doing the theta scalping, gamma scalping, theta scalping. Andre says you don't have the 5 and the 1 there, Dan.
I have these on 5 minutes right now just because I've been doing my own testing. So this is, and I have this set to triple down here. So if we look, I'll show you. I have it on a 3. Well, you can actually see it right there too. That 3 is the indicator. If you haven't figured that out yet, that's the multi-factor, is this number right here. So I have it set to 3, so I'm on a 5. So this is looking at 5 and 15. And I've been just looking back and forth since I've downloaded it myself between the 5 and the 10. And I'm just getting a feel for it. So yeah, if you want to put a 1 in there and put the multi-factor at 5, you can look at 1 and 5. Absolutely.
Yeah, and actually there was a comment, I think, last week regarding using the scripts on 2 different charts. So you had, let's say you have 2 RTYs set up, and you have one on a 5 minute, and then you got the multi-factor at 3, so that's 515. You can also do another chart with a 530, so you could do 6 times and see if they also confirm each other. I forgot who made that comment. I think it was Mark, maybe.
Yeah, he was talking about having 3 and trading the middle. So you have your higher and lower time frame, and you're trading the middle one. So you might be looking at, say you're looking at a 5, and you're trading a 10, and you're also looking at a 15. It was Keith. There you go, Sham.
Yep, exactly. Mark asks, Dave, what is the blue line, midline, and the new script? I commented that out, and that's why it doesn't show up in my videos. If you download the new one, yeah, Dan's going to show you how to get rid of that. You can take out that mid, basically just.
Yeah, it's the MSI mid. So if you guys didn't catch that, just come into your studies, pull up the gear, go to MSI mid, and you'll see it because it's the blue color. Just uncheck the show plot, and that line will be gone if you don't want to see it.
Yeah.
Then apply it, okay?
Yeah, I don't use it. It's supposed to, the purpose of it is to identify the midpoint of the bars. And so when you get a spike up, it's a midpoint, it's a midpoint, it's a midpoint, because so it'll kind of show you, it runs along with the signals. It was a feature that was built into it that I don't use. I mean, you can test it out and see if it works for you. When they converge, supposedly when they converge, the blue line converges with the signal line. There's some indication that the market's going to move in the direction of the signal. It gives it a stronger indication, but I tend to to me it's a little distracting, so I don't use it.
Andre said maybe this is a good setup. The Renko's setup plus the new signals. The one thing that we do talk to people from time to time about, is yes, strong markets always coming out with great things. Dave's developing things and hands it off to them, and they do whatever they do to get it out to the public and our subscribers, I should say. We're working with them all the time. Don't overburden yourself with, hey, let's make sure these 85 indicators line up for me to make a position. Test them out. You'll find, you've seen Dave do different videos, right? He's looking at a 1 and a 5 with one line. If I sit here and look at this little red arrow, yeah, it took a little down move. You test what works for you and then make it work. Don't make sure hey, I need to make sure this works with everything else, because you're going to drive yourself crazy looking at too many things. That's my personal opinion.
Absolutely. I mean, test everything out and then just keep the things that work for you. Absolutely. That's great advice. Oh, it was Keith that said that, Hashem. Okay, great. Yeah, that was a pretty good observation. I thought I liked that, having two different charts of the same window using the multi on two different charts, two different time frames.
Oh, I saw that, Eric. Sorry. Yeah, Eric's asking about, you had on your video, Dave, you have a market ETF kernel. Another secret script.
I knew somebody was going to ask about that. Jeez. I'm not ready to answer that one yet.
That one's to be determined, Eric.
It's nothing special. It is an update to the Market Timer Excel script that comes free with the Market Timer membership. And basically what it is did I send that to you, Dan?
I don't believe I have the internals one yet.
All right. It's what it is it's another way to read the market internals. So I was getting tired of going back and forth to the screens that Dan showed you earlier, the up and down volume and stuff like that. And so what I did was I created I modified the Market Timer Excel script, which has the 4 lines. Basically, actually, if you want to switch back over to me, I can kind of give them a little demo here.
Sure.
Let me just spread this out.
While you're switching, Hisham's asking about candles versus bars. That's completely up to you, Hisham. That doesn't matter when you're looking at these regular charts and using the Renkos. The only part where it really matters is in the VA, where it has to be the candle trend for those charts.
All right. So this internals is basically the same thing as the Excel script. The only difference is the green dots is the volume, and the gray dots are so it's the up and down volume. That's the up and down volume is the green dots. The gray dots are the up and down issues. So it's volume and issues. The yellow line is the average of those two. So I'll give you an example how I use them. All I want to do is basically see if they're above the 50% line or they're below the 50% line. If they're below the 50% line, that indicates that we're going to have a down day, but it's probably not going to be very bad unless they get to the 80% up levels or the 20% lower level. So it's 80-20. The 20% is extreme negativity, which is exactly where we finished yesterday. And anything in the 80 level, right now it's at 79. The average is at 79. That's extreme bullishness. And so this is going to be an update for all of the Market Timer subscribers who just have the regular subscription. This is an update to that. The red line is a moving average, and the green and the red lines are moving average of the gold line there. So it just kind of gives you an idea of the trend. You know, you can see the market internals are starting to decline. And basically what it's doing is just helping me get a handle on, instead of looking at the advanced decline, I can just put it on here and say, yeah, everything's, you know, we're negative here, or we're positive, you know. Internals are, you know, very, very positive here. That's all. So that will be, in fact, it's ready to go now. I've been testing out. I love it. I'll tell those guys to upload it to the portal this afternoon, and you guys can download it. Who's ever a subscriber. So there's no cost. That's just an upgrade to the Excel script that comes with the subscription. Back to you. And we do have one other thing that we're working on. Mark had sent an email to me asking me to look into the VXX. This is kind of interesting. Do you have a new window that you could open a VXX in?
I can. I'll use this one I stole for. I was going to show everybody the original Market Timer XL. Is this one?
Oh yeah, exactly. Yep. So what it does is it takes the advancing issues and declining issues and puts them in dots instead, and then we just do an average of those, the advanced decline, and that's exactly what's being updated. Yes. Yep, that's exactly right.
The previous 2 days when we were tanking, it was all the declining were all rule and roost. This is when we've seen, you know, it always goes back and forth. Negative, positive, negative, positive.
Yeah, I know. Yeah, I know. It's really interesting. It's really, really interesting. So yeah, it's an update to that script. Exactly.
So what do you say, X? Who's your new one?
It's VXX.
Then I'll turn the price subgraph back on. I'll take out the MTXL, or maybe I'll leave it in. Might be fun. Wow, what is this? Come here.
Just double click on the rate scale there. It should be good.
There we go.
So the this script has some, the VXX has some interesting what was I going to say? I forget. Oh my gosh.
Excuse me.
Principles. No, not principles. It has some interesting. Oh my gosh. Okay. I've been looking at it too long, I guess. So, Alzheimer's. I better be ready for that. Go to a 30-minute chart. So you can go back a little bit farther, and then scroll back to when the chart starts. I think it was like December. You should be able to get December in there. No, probably not. Okay, go to a 1 hour chart then.
Yeah, I got a year for a 1 hour. I only got 30 days for it's a busy market. All right. December, way up at 52, almost.
Well, look at to the far left. You see how there's not much really volume there. The bars are kind of painted, so it looks like there's not much liquidity in it. Way over to the left there. So that was back in way over to the left. Way over to the left.
Oh, yeah. Right.
Yeah, see how it doesn't look like there's much liquidity there because the bars are not well painted. That was back in July of 2018. The VXX has been around for a very long time. I think it's been around since 2009. But they said every 10 years or something, they have to like renew the VXX ETN. It's an ETN. It's not an ETF. It's an ETN. And it had to be renewed every 10 years. So that's why you can't get any price history beyond last July, because it's been 10 years and they had to renew it. Because what happens is they use futures contracts in order to determine the price of the VXX. That's what it's kind of a derivative of. And so what happens is all the futures contracts, of course, when they get to the point of expiration, they go to zero with the underlying. And so what happens is eventually the VX isn't going to move and it's not going to have any price movement. So they had to renew it, I guess, in order to use it again. That's why you get a lot of sporadic stuff in there. It has interesting prospects. It's tied not to the VIX. It is not tied to the VIX. It is tied to the S&P 500. So it's another way to determine volatility in the S&P 500. And yeah, you can see the peak there at around 52. That was in December of last year when the market went down like 3,000 points, and we ended up, starting to go up after that. And we've been going down ever since, because the market has been going higher. So it's inverse to the market, just like the VIX is, basically. I mean, not 100% inverse to the market, because as you guys already know, and if you haven't watched the video that I did on volatility, which is in the members area, hopefully all of you guys have seen it. If you haven't seen it, please go back and watch it again, because it is probably the most important video I ever did on volatility. And so there's not a direct inverse correlation to the market, but it depends on the price of options, both call options and put options on the S&P 500. So when premium starts to come out of the S&P 500 call and put options, and it's a misconception that it's only on put options, it's also on call options, premiums. The VIX will come down, the VXX will come down accordingly. And when premium starts to rise on calls and puts on the S&P 500, the VXX will rise. And so it has some interesting properties. So in other words, it's really it's in a range, and so it's not like a stock where it's just going to continue to go up or continue to go down. It fluctuates based on the premium levels of the S&P 500 options. So Mark had emailed me and asked me to, oh, thank you, Greg, threw in the link there. Perfect. So Mark had asked me to see if there was anything that we could do in order to create some sort of trading system or other indicator for the VXX. Now, this is where it gets interesting. I started playing around with it a little bit. I didn't really have much success this week on kind of looking at it. But if you put on a Renko on there, the cloud. I don't think you actually added it to the...
Did I miss?
Oh, there it is.
Or do we have to have it on a 10-minute? Oh, it's thinking about it.
Oh, it's thinking. Yeah, I had to.
It's just
slow. Time to draw it.
Yeah, it's busy today.
Yeah. Yeah, keep it on the hourly for a few minutes. It seems to work fairly well, just like it does with the other stocks, right? Just like with the other indicators. So I kind of like it as a proxy for maybe a moving average or something like that. But it does seem to work pretty well. But go to a longer term. Go to the daily. It's not doing it on yours. Oh, I think because I modified the script. That's why.
No.
Let me see if I can duplicate that on my side. And my computer crashed, so it didn't save the window that I had for the VXX, unfortunately. Let me see if I can. Oh, that's right. Yeah, the one that I have. Renko.
This is where we get all the golden nuggets where Dave says, I modified the script.
Yeah. You can switch back to me if you want, and then I'll show them this.
You guys aren't getting seasick yet.
Yeah, it's like, oh my gosh. No, that wasn't right. I don't want to do just that. Let me go back and do the other window. I think that's right. All right, there we go. So I started playing around with some signals, and I started developing something called a seismograph, which I didn't spell correctly. But spelling is not my first language. So I started experimenting with something called a Renko Cloud experiment. And let's just apply that. And it's thinking. Come on. Come on. I wonder if I added it. Oh, I didn't add it. What the heck? I'm telling you guys, Alzheimer's is a real thing. I want to go Renko experiment. Yeah, there we go.
Actually, August 13th already. I'm looking at your chart. I'm like, 8/13? I'm like, is that right? Are we in the future? That's just crazy.
Yeah. Okay, so this is what I got. A little bit of an experiment here. Since there is like a different type of calculation for the fair value of the VIX or volatility. What happened was when I put it on a 1 hour chart, it zero lined at 39.76. So it looks like, at least for the time period that I'm on here, that is the fair value area for the VXX. So when we get too far below it, and what I'm trying to do is in this experimental Renko Cloud is determine the percentage difference between the fair value that it's saying is 39.76 and the current level. So when it gets down to these very, very low levels, I want to see what the percentage is difference between that and the fair value level. And when it gets down to my theory, this is just a theory at this point, but my theory is that when it gets down below that level, when it's down, let's say it's 30% or 40% below that level, it's going to reverse and move higher. And that's exactly what it did here. So, and when it gets too far above on a percentage basis, maybe 30, 40% above that, then that's the end of the move, and it's going to reverse and go lower. And so when we got down to this level, and I'm not sure if that's exactly the same level. Let's say I can't zoom that out. No, I should just use a price chart. So it was even below this level here. So I want to check and see when the percentage changes between the fair value area that the Renko Cloud is calculating and the lower end. When that percentage starts to go in one direction, I want to see what that percentage is, and then it reverses in order to kind of close the gap in that fair value area. But I found it kind of interesting. And I think the more I think about it, I think there's absolutely trading opportunities. Now, here's something very, very interesting. And that is Can you guys see that okay? Should be able to see that.
Which part are you looking at? I'm seeing you pretty good.
Okay, as long I guess as long as it's within the other window, you can see it okay.
Oh, are you? No, we're just seeing your mouse move around.
Oh, okay. I'm trying to get to another window now. How do I do that?
You must be sharing only certain parts, so you might have to share the whole screen or something.
Okay, let me do this then. Let me back over here. Okay, can you see that okay now?
Yep, we got your options, it looks like.
Yeah. So what's interesting here is that let's say if I'm looking at the difference between the fair value area that the Renko experimental script I'm using and a percentage change difference between that in that fair value area, you could basically say, well, we're either too low on the VIX or too high on the VIX, and look at the options that they have on the VXX. Let me go to the volume. I looked at the volume. The volume is amazing. Look at the volume on these things. The open interest is like 7,000, 26,000. The volume today is pretty hefty for a option chain that's going to expire in 3 days. So this is not even the weeklies. These are the regular ones. Pretty liquid. I would say very, very liquid options. And so if I was going to be trading the VXX, I would come up with a indicator that would tell me, hey, this is probably a good opportunity to sell options, sell calls, or sell puts, and when to buy them, especially if I think there's going to be an explosion in volatility. For the most part, on a regular and consistent basis, and I think this was kind of the point that Mark was trying to make, was that, hey, he has a system that works about maybe 2 to 3 times a year, kind of like the triple T days that we were talking about the other day.
Yep.
He says if there's a regular and consistent way that I can trade the VXX, that would be absolutely fantastic. And I'm kind of getting an idea that there is a way to do this. The way I would do it is, let's say if it's too high, I'm going to start selling some call options on a weekly basis, probably on a weekly, so that the theta is the highest at that point. So if we took a look at the theta, I don't have a window big enough here. Let me close that. The theta, as you get closer to expiration, of course, is going to get crushed if the VXX moves in the opposite direction on the call or put side. Very, very interesting. I think that there's lots of opportunity there. I'll pass it over back to you. So I appreciate Mark sending me that email, getting me to think about the VXX. I haven't traded it a lot. I haven't traded it at all. But I would trade it a lot if I can come up with a system to identify how to determine a fair value, number one, and also to determine whether or not percentage change move is coming and when it's going to come. I think that would be absolutely fantastic because of the properties. That's the word I was thinking of. The properties of the VXX are such that when volatility spikes, typically that premium is very, very high, and you can get a very, very nice return on selling it.
Mark says, that 3 to 4 times a year is he's only going long, and he's saying what he's done is primitive compared to what you've already done.
All right. Yeah, no problem. I think there's a lot of potential there. And don't be surprised if Dan and I come out with another course on it.
Little strategy. There you go. You can come on and be a co-host, Mark.
I have to. We have to do quite a bit more testing, but I think it's possible. I think it's very, very possible.
Nurug, I see your question there, so don't worry. I can. He's asking the darker and the lighter arrows. He's asking if it's the beginning and the end. No, that's the different time frame. So that's the wrong button, sorry. When we're setting this, right, the multi-factor, so that's looking at a different time frame, right? When you get two of them, that's the multi-factor drawn in. So that's the confirmation of both 5 minute and 15 minutes saying down. That's
Yep.
what you want to look for. That's your bread and butter using the signals. You see the two signals, you take a short. She goes down. You can get all either when you see a green arrow or you make whatever profits. So if I zoom this in, since we've had such a big day, here's the arrow.
That's a pretty good move right there.
Yeah, call it 29.35. Maybe you got it a minute later, whatever. That's 10 points on the ES, down to 27.28 from 38 or 35 to whatever. That's a nice move on ES.
The lighter one is confirmation in Nordic. So the darker one is the current time frame, and the lighter one is the confirmation that you have on the higher time frame.
And it is important that see how this one's flickering. It's all based on when the bars close. That is interesting that one flickered if it's back here.
Yeah, yeah, it is. What happens is you're not getting confirmation based on the. You have to wait until that next bar is painted.
The next one's closed. It affects this one too.
Yes. So
okay.
Because it looks back to the previous bar and say, hey, is it higher or lower? And if it's lower, then it's not going to paint that signal. So you can take the signal if you use the other indicators, for example, the volume and the Renko cloud.
Right. That's when you're watching these.
Yeah, exactly. So you got to be watching. You got to be watching all of those conditions. But even if you waited for that painted one, so you got the early signal on the current chart, you got the confirmation on the longer term chart, and then you can take a short position.
Voltaire, we were mentioning that earlier. He asked, do you recommend 5 or 10 minute? That's, soup du jour, trader's choice. What's the other word you used? Risk tolerance, whatever you want to do. If you want to hold a shorter contract, longer contract, for trading a 1 and a 5 or a 5 and a 10 or a 10 or 15. Ultimately, it's whatever you're most comfortable with. There isn't one magic time frame secret sauce. They work on multiple time frames. Look at the YM up here at a double on the same time frame. If I switched over, it's probably a bad day to do that, but we'll see what happens. I do have a 10 and a 30. Always know you need to have the multi-factor chart or else it won't draw. So I do have this set up on a triple. So I do have a 10 and a 30. So there you're seeing less. So if you're watching a 10 and a 30, you may have missed this if you're waiting for 2 red arrows. Whereas back on the 5 minute, as we saw in the ES, it also did show up on the YM. So adjust it, play around. If you want to do more of a swing trade, have higher time frames. If you want to scalp intraday, have lower time frames. That way you'll get the smaller moves. That's what it's going to be at the end of the day, right? If you're on a 1 hour chart and it's looking at 1 and 3 hours and you get a double move, you'll take a position, but you'll probably hold it for a day or something, or multiple hours versus minutes, or 5 or 10 minutes or an hour or whatever. So it all comes down to what your, as Dave said, risk appetite, what your style is, what you want to do, or the time frames. Double signal valid until the color changes. Yes. So this is still valid down here. So you won't get another red signal. This one's still valid. Yeah, that's a good question.
Yep, that's exactly right. Yeah, you want to look at the slope of the signal. So if you're going to exit that short position, you want to see it kind of turning up a little bit. You had a couple of flashes there, but it didn't hold, so it's still a down signal until you get another one. But the exiting of that position would be when you see a kind of an upturn along with the volume.
Yeah, I'd also be watching. Where's my volume on here?
And where are you in relation to the Renko cloud? Right now we're at the bottom of the Renko cloud, so that's an exit signal for me.
Yeah, we came down and hit the bottom of the cloud here.
Yep.
After a nice move. Yep.
Yep.
Andre, multi-factor is whatever you want it to be. The key is that you need to have the chart built in the time frame. So if I go into the studies,
Oh no, I think he's asking if the multi-factor is, if you have it on a 1 minute chart, what's the multi-factor?
Well,
Yes,
it's whatever
it
you
would be
set it.
5.
So I can change this to be whatever I want, right? If I set it to 10, it's going to do a multi-factor of 10, so I need to have a 1 minute and a 10-minute chart. If I set it to an hour, I need to have a 1 hour and a 10-hour. So you can customize it. We're doing, 3s and 5s. Most of me, I'm doing 3s on all of mine because that's what Dave did first.
Yeah, I like the 5 and 15. That's kind of the one that I've been using the most recently. I like that one. I like
That
that.
makes sense, Andre? So this is not hard-coded, so the multi-factor can be whatever you set it to be.
Right. So if you're on a 5 minute chart and you want to have a 15-minute as confirmation, then you do the 3 on the multi-factor, 5 and 15.
Because it's 5 times 3, 15. So if I set this to a 4 by accident, watch. I don't know. I probably do have a 20-minute chart.
Right. You're not going to see the signal because it's trying to find a 20-minute chart, and there isn't any 20-minute chart.
I actually do have one, I think.
Oh, do you? No, you don't.
Interesting. Apparently we're lying because it drew in. Andre did something.
You said you had a 20-minute?
Andrew
Oh, there you do have it. Oh, no, you don't. No, you don't have a 20-minute.
Let me double check. Whoops, not that. Too many buttons. 4.
4 times 5 is 20.
We're going to have to ask Andy or what he did there. How's that working?
Yeah, that's different.
Well, that's how it's supposed to work, gentlemen.
Go to a 10, multi-factor 10. Let's see what it does. I think maybe it's only like on the really higher time frames because no, it's not going to that. Maybe.
You add time frames. Well, this is thinking it'll probably never draw in. I'll go to a different one.
I mean, if you do like a 3 hour or a 2 hour chart and you go to 5 or 5 multi-factor, it's not going to do a 5 hour.
Yeah. See, now we're not drawing because I'm on 5 and 10 and I don't have a 50-50.
Yeah. So, maybe on the lower time frames it might work, but I wouldn't trust it. I would only do it on the ones that you have set up in your TOS.
Right. And a new rug, how you add them is you go into customize list and you create whatever time frame you want. You say, I want to add a time frame. You can pick intraday, daily, custom. You can pick the intervals and the aggregation period, and then it'll add it to your list. I think there is a maximum of how many you can have, but that's where you manage that. 3 on bot, 5 on.
Yep, that's correct. So your multi-factor would be 3 for a 5 and 15. That's
Right. Yeah, let me go back and switch that. I broke
Anurg says, Dan, how do you add time frames to your? Oh, okay.
We just showed it. We're good.
Yeah. All right. Awesome, man. Let's see what time we got here. We are past our deadline of 11 a.m. But thank you guys so much for joining us. Hopefully this was interesting to you. And we always appreciate you guys being here. Otherwise, it would be just Dan and I. And that would be lonely.
Thanks, Mark. Thanks, New Rug. Thanks to Sean. Appreciate it. David.
Mark, I'm going to keep working on that VXX. I think you got some. I think there's potential there. You're onto something. All right, Voltaire. Great, Greg, Keith, Mark, guys, Mike, Andre. Have a fantastic day, guys. And
send it to your email. We'll get hooked up. I'll get your date set for sure. Mike, Andre, Mark, B, Keith, Greg, Walter, everybody's awesome. Eric, good seeing you, Eric.
And we're still good for this Thursday, right?
You got it. We're still on Thursday.
Awesome. See you guys Thursday. Have a great day.
Have a great day.